Tamikaze here with episode 14, talking about gaps. What I want to talk to you about are the different types of gaps, why they're important, and how to play them. So I have Apple pulled up here with some labeled gaps, but before we get into it, I want to show you some real easy charts here to look at gaps here. So the important rule of thumb is gaps tend to be filled, but they don't always get filled. So people ask me all the time, how do you know when a gap's going to be filled versus is not going to be filled? Well, I mean, there's very easy way to do that is you have to know what type of gap it is, and you have to see why that gap happened. So there's different types of gaps. There's common gaps. Common gaps almost always get filled, but then there's other gaps that don't get filled, such as a breakaway gap doesn't usually get filled, but a measured gap sometimes get filled, and then exhaustion gaps almost always get filled. And then island reversal gaps will sometimes get filled, but don't always have to get filled. So measured gaps, common gaps, exhaustion gaps are your most likely to get filled. Breakaway gaps and island reversal gaps are probably your least likely to get filled. So a common gap is just during normal price action and normal volume. Doesn't signify anything important other than it's just you're getting news in the market, and maybe that helps the stock gap up and down in pre-market. And those tend to get filled pretty quickly before price action breaks out, and this would be a breakaway gap here. So what we're going to be talking about a lot are breakaway gaps and some of the other types of gaps, but the most important one in my opinion is the breakaway gap, and then measured gaps and exhaustion gaps are just continuations of that. So I have here Apple, and what we have here I'll show you is a breakaway gap here. So you have a long period of up movement, and then a consolidation period, and then you get this massive volume spike and this huge breakaway. So this is a breakaway right here into a couple of measured moves. Now, the important thing with the measured moves is they're basically just continuations of this breakaway where more buyers are coming in because they missed this initial breakaway, and because we have a bullish sentiment on here, they're trying to get in on this movement. So we're getting additional measured moves. And then what happens eventually is you'll get maybe an exhaustion up here and reversal. And then you have basically more action here, and then you get an increase right here. So this is an exhaustion where you get this final move right here, but this is immediately sold off, and then you have some common gaps here. And while these might be signified as a breakaway or an exhaustion right here, I find them more as a common because they're smaller, and the big thing is the volume did not increase for those. So that is a breakaway or a common because the volume did not increase. And these are what I would signify as important gaps because you're seeing volume increase on these gaps. So one thing that is really important now that we identify different types of gaps, one last thing. There is an island reversal gap as well. So if you have a long period of movement with a rounded top and then a gap right here, so a long period of movement with a rounded top into a gap is an island reversal, and you see this massive volume right here. That means that people are now taking profits and shorting the stock. So there's a couple rule of thumbs that I want to go over with gaps. So I talked about how common gaps are the most likely to be filled, and measured gaps, while don't have to be filled, do tend to be filled eventually, and exhaustion gaps almost always get filled. And island reversals are basically the opposite of a breakaway. So breakaway are your bullish, and then island reversals are your bearish. You could also signify this as a breakaway if you were to flip it upside down. You could call them both breakaways, but I like to keep them. Different for just descriptive purposes. So I would signify this as an exhaustive gap. So you have basically a breakaway right here with a little bit of increased volume, and then an exhaustive gap here. Now these are probably stretches because they're smaller gaps, but if you were to blow those up on a bigger chart, that would probably help you. But what I want to talk about is, while gaps don't always have to be filled, um, there is a rule of thumb though. If a gap starts to be filled, it is almost always filled. So if you have a gap, for instance, like on an exhaustion gap here, you have this breakaway here, which could signify, you might think this is a breakaway here, but you have this immediate volume reversal. So you have the selling volume is greater than the buying volume here, so signifying a reversal. And then as soon as it breaks right here, you basically know that this is a reversal right here, and this was the exhaustion gap and not a breakaway gap. And because it started to be filled, it will be filled. So if a gap starts to be filled, it will almost always be filled. So just keep that in mind when you're playing gaps and when you're looking at gaps. It's important to know what kind of gap it is, why the gap happened, and then you can know whether that gap will be filled again. And again, if that gap starts to be filled, that is a great sign for you to get in on either a call if it's going down or going up through a pre-gap, or a put if it's going down, because if a gap starts to be filled, it will almost always get filled. And just make sure you're paying attention to volume with gaps too, because they have a big part to play in whether those gaps will be filled or not. Hopefully this helped with your gap questions. I'm sure that's just going to raise even more questions, but maybe we'll do a follow-up episode if I do get a lot of questions on that. And again, this was episode 14, Gaps. I hope you have a wonderful weekend, and hopefully we can make some money in the future together.